Hello and welcome to BQ Prime. A very good morning to all the viewers. Joining us on the show today is Mayuresh Joshi to discuss the movers and shakers in trade, though the markets are pretty much flat, but we are above those 18,300 levels. Mayuresh, good morning and welcome to the show.
Morning, it is always a pleasure to be on your show.
Thanks. Mayuresh, let's start with the Dr. Reddy's. The company reported numbers. What's your first take and what would you advise an investor to do?
So obviously, I think the disappointment that has come through in terms of the US sales, specifically Revlimid, contributing to the deacceleration that we've probably seen. Expectations largely are now getting built in terms of the pipeline that Dr. Reddy's has for the better part of the next financial year. Now, going by their con call last time around, they were expecting around 25 odd product launches to come through for FY24. A majority of those in high complex generics, which means the margins for these products are going to be relatively higher. At the same time, the backward integration for the molecules needed to manufacturing these new niche segments or new niche products, 60 to 70% is probably going to get integrated locally as well. Therefore, I think the kind of margin performance that one really expects from Dr. Reddy going forward should be sustainable between the 24-25% mark or even a little bit higher if these product approvals and come through on a timely basis. So yes, I think the kind of reaction that has come through in terms of the US sales, Revlimid being a large part of it, I think that should show signs of normalization that new approvals come through. And the market has probably taken the de-acceleration to a large extent in terms of the price action as well. But to a large extent on the O'Neill lens, trades about moving averages. Anybody holding can hold on.
Moving on, another company that is focused from the pharma pack is a Novartis India. They have reported a profit versus a loss. What do you make of Novartis?
Yeah, so MNC pharma companies are slowly and steadily coming back into favor here to a large extent. The performance was, wouldn't say a turnaround, but yeah, it was obviously working on a low base on last year's annualized performance as well. And therefore, I think the kind of product mix that they've got, I was hearing the Novartis management out as well. A lot of MNC pharma companies as well plan to introduce more products, more drugs into the Indian markets, a few of the blockbusters that they've got globally as well. And therefore, the kind of expectations that one had, cash-rich balance sheets, relatively stronger cash flows, and better numbers to exhibit, probably an uptick in terms of numbers reactions on Novartis. But a large extent that you need to be very, very selective when it comes to the pharma.
Right. Another one coming in is a Sanofi, where the board has gone ahead and approved the demerger of its consumer healthcare business. What would this actually mean for investors? And the stock is up around 4.5% as well today.
So again, I think any news related to demergers creates value unlock for investors. Because if one part of the business is not doing well, I think it keeps a drag on the console numbers, and the other part does exceptionally well and keeps on supporting the console numbers as well. So demerger, good news, because I think consumer businesses are expected to do very well in India. And even the standalone, as I said, for a lot of these MNC pharma companies, the stability in numbers is something that one can really expect. So I think more news flow at this point of time, creating a positive.
Right. Mayuresh, moving on, you have a Hindalco, which is moving in trade today, and this is on the back of Novartis numbers. What do you make of Novartis numbers, and how are you viewing the space?
So to a large extent, I think the kind of expectation that one has in terms of the EBITDA performance per ton, that should show signs of improvement in the second half, expecting around $500 to get reported. Net debt reduction has been significantly lower. The beverage can market should hold up. Pricing still remains a question mark, and therefore the recovery should slowly and steadily start coming through in the second half for Novartis in particular. Capex is a relatively higher side compared to last year, and that might have impact on the free cash flow as well. So I think a steady improvement expected in Novartis' numbers from the second half.
Right. And what about Ratnamani Metals? Strong performance in the fourth quarter. The stock is up around 10% in trade already today. What would you advise an investor to do? Good levels to enter, taking how the metal pack is panning out from here on?
So for Ratnamani in particular, on the O'Neill lens, if is above key pivot level. So small pullback on low volume with this area, but I think it's coming out of the stage one base, as we call it, which is very, very strong. On the numbers itself, numbers have been very, very strong. The kind of business segments that they operate out of, stainless steel tubes, carbon steel tubes, getting into ERWs as well, and a small component coming through from the seamless pipes as well. Capex from the government side, order will expected to be significant. The delivery in terms of the operating performance has been strong, expected to continue doing so. And therefore, the reported EPS for this fiscal has been spectacular for Ratnamani. Can they continue this volume growth going forward, along with a stable market trajectory, creating an operating leverage? If numbers are to be seen over the last 2 to 3 quarters, I think the trend might very well continue. And looking at the large, big picture in terms of capex spend, more orders coming their way, margin accretive orders as well, I think that trend might very well continue. So yeah, I think it looks very, very positive on the earnings.
Right. And very lastly, if you see the city gas distributors, good set of numbers that have been reported. What should someone do with this space?
So yes, better than expected numbers for city gas distribution companies in general. What you've also seen in terms of gas prices getting revised, obviously I think the downward revision will mean better competitive in terms of other fuels available, and therefore the volume activity might show significant traction. The government intent in terms of taking this to 50% from 6% means that there is significant scope in terms of most players within the spaces, within the listed space to be particular, to probably expand their geographical territories. And with gas prices expected to remain low and benign for the better part of this financial year, expectations of volume growth coming back will lead to operate on that balance sheet. So yeah, the momentum probably stays pretty.
Right. So I think that's going to be a space we should be watching out for as well. Thank you, Mayuresh, so much for joining us on the show and giving us those views with regards to the stocks that we've discussed so far. It is going to be an interesting day of trade as well, taking expiry into consideration from a technical perspective. Thank you. Stay safe and speak to you soon again.